Hey everyone, this is Jeff Nelson with IXL Real Estate. I am a realtor in Lower Alabama. And as promised, I said we were going to give a weekly update on the mortgage industry. And if you saw the last week's video, I introduced Dan Henry, my good friend, who's a mortgage lender. I do want to say that I made a mistake last week and I said he had 12 years experience. It's actually 21 years experience. So dyslexia, I guess, kicked in back a week ago. But with his 21 years experience and my 18 years experience in real estate, we thought it'd be great to team up together to give a better service to our clients and future clients. And so Dan has agreed to show up with me today in person, and we're going to talk about something that I think is really good. It makes a lot of sense nowadays. Rates are what they are. They're high. They actually are a little less than they've been in the last 3 weeks, but they're still high. So buying down rates is a good topic, I think. So Dan's going to talk about that. So take it away, Dan.
Yeah, hello everybody. I'm Dan Henry. I'm with Advanced Mortgage and Investment Company. And as Jeff said, I've been with this company I'm with now for a little over 21 years. And in those years, one of the biggest impact I've seen on consumers is the interest rates going from what they were a couple years ago, an all-time low, to where they are right now, extremely high. Something Jeff talked about last week was, even with the interest rates, there was still, I think, well over 400 mortgages taken out in Baldwin County, if I'm not mistaken. So I wanted to tell you a little bit, a couple of options that I can let you know about that can offset that. One, it's called our temporary 2-1 buy down. So I'm going to use 7% as an interest rate. It's close to that right now, but say the interest rate 7%, you make an offer on a house. This temporary 2-1 buy down, the way it works is if you can get the seller, or if Jeff can get the seller to contribute 2% of the sales price, which there's usually a lot of wiggle room when sellers are selling their house. They purposely set it up that way, but if they're willing to contribute 2%, it would go into an escrow account. And instead of your rate being 7%, for the first year it would be 5%. And that's a big savings. That can be like $400 a month on a $300,000 house. So for the first year you'd be paying 5%. The second year it would go up to 6%. And then at the end of 24 months it would go back to the 7% rate where it started. Now, in a perfect world, the best case scenario, we think the rates are going to come back down, possibly 3.5% to 4% within the next 12 to 18, possibly 24 months, according to the experts. If you refinance before the 24 months, you'll get that money back. It'll go to a principal reduction on your home. And that's just one way that you can look at this. If anybody wants to call me or get in touch with me, every situation is different. I'll be more than happy to work some numbers up with you, see if that works for you. If not, there's other options of buying the rate down. And I'll leave you with this. Any loan done right now, no question, is a temporary loan. Even before the rates got high statistically, nationwide people keep loans for 7 years or less. In this case, we're thinking 12 to 18 months. So temporary loan, and I give it back to you, Jeff.
All right. Good information, much needed in our industry today. So I'm going to put, of course, my information is in the description below when you're ready to actually start looking for a house. Dan's information will be down there below as well. His office is in Spanish Fort, but I'll put down his, I'll make sure you have his phone number and email address, website, and all that. So can they go on your website and get pre-qualified, or they just call you to do that?
Absolutely, they can do both. I love to talk to people. They can call me anytime, my cell number, but you can also go on my website, and the first page you can fill out some information and get pre-qualified. But call me anytime, email me. There's several ways to get pre-qualified.
All right, folks, that's our short weekly mortgage update. We're going to go back out there today and get after it. So if y'all need us, just give us a ring. Talk to you later. Bye.
Bye.